You're listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 9th of January, 2017. Let's jump right into the markets. What do we see going on our weekly chart? We're still in a confirmed uptrend on the weekly chart. And what we see happening on, and again, this is the S&P 500. This is the 500 big companies in the stock market. We see the market again testing the high that it hit back on the week ending the 16th of December. It's right up there at it. We see the PPO, the price percent oscillator, continuing to kink over, moving back up. We did have our 2-day chart rotate over, and it's still not re-cleared, crossing over, going down back on the 2-day chart on the 30th of December. But we have had for the last 6 days, we've seen actually the charts move around and start moving up, but still not enough energy to cross over on the PPO going up. What does that mean overall? Well, it means that we don't have an up trade at this point. We have to have both our weekly chart and our 2-day chart moving in the same directions, and we wait for a pullback on the 2 or the 4-hour chart. We've been using the 2-hour chart lately, and then we trend follow when they both, well, when the two big charts are moving in the same direction and the 2-hour chart backs up and then moves in that same direction. That is the sweet spot where you're the most likely to have the most profitable trade, because our rules are: first, don't lose money; second, make money. So we don't have any play yet in the SPY. If indeed we see a crossover during the week on the 2-day chart, we're going to look for a pullback on the 2-hour. That's then our trigger to jump in. That's where we are on the S&P 500. We're going to back now and go ahead and record on your daily market worksheet that the S&P is still in a confirmed up move on the weekly chart. If you don't have that daily market worksheet, how do you get it? Well, you go to the website chartingwealth.com, you subscribe to our newsletter, and we will send you that along with our How to Read a Stock Chart video and the layout that we use at freestockcharts.com. So that's where we are in the S&P 500. Next, let's move to the Qs. What is the Qs? That's the NASDAQ 100. Where is it on our weekly chart? Congratulations, it just crossed over, going up over the course of the last week. So we now have a confirmed up move on the weekly chart, which is great news. We have had for a while the 2-hour chart, the 2-day chart moving up, 2-hour chart also. But what we are looking for, now that we've had the weekly rollover, we already have the 2-day in a confirmed up move. In fact, it rolled over at about the same time as the weekly chart. That was back on Friday and the 6th. So what are we looking for? Well, let's go and take a look at the 2-hour chart and see what we see. 2-hour chart actually rotated over back on the 4th. That was too early for the current moves that we have in the weekly chart that just occurred. So we're going to wait for a backup on that 2-hour chart, which may happen over the course of this next week. And then once it rotates back over, moving up, that is our trigger event for jumping into the NASDAQ 100. It may or may not occur. We'll keep you posted throughout the course of the week. Okay, we're going back to our weekly chart. Let's take a look at, at the bond market. What is going on with the 20-year bond? TLT represents that. It's an ETF that again tracks the 20-year Treasury bond fund. And what do we see going on? Well, it's still in a confirmed down move on the weekly chart since it rotated over, going down back on the 19th of August. It's been quite a while, that bonds have been moving down. We have seen a rotation over, going up on the 2-day chart back on the 22nd of December. And again, we've had a nice clean crossover. We then saw, of course, the 2-hour chart rotate over, going up back around the, let's see here, when was that? Sometime around, looks like the 29th or the 28th of December. And we're still waiting for the weekly. Now, is it a bottom? Have the bonds reached a bottom? Excuse me. That is indeed possible. We will just have to see. The bonds ended the week down 0.92%, but that does not mean, of course, that the bonds are rotating over, going back down, particularly with that strong up movement on the 2-day chart. Sorry about that. Just choking a little bit. So we will continue to watch bonds over the course of this next week just to see if indeed we have reached a bottom. Once that weekly chart pulls over in bonds, then that may very well give us the ability to jump in. Now, some people might say, hey, I want to call the bottom and ride it up. You can sure do that. It's just inherently dangerous trying to call a bottom. The minute you get in, you realize you've not reached a bottom. But we did have strong developments with that 2-day chart rotating over, and then after the pullback, the 2-hour chart rotating over, going up. So you can keep that in mind. And of course, we encourage you play with these things. You're using your virtual trading. You're not using real money. Once you get really good, remember, we're an education firm. We're not a stock calling service. You don't pay us anything to bring you this information. We are not about to start telling you what to do with real money. We want you to practice, learn from us, learn from your own experience. Once you get good, you can make your own calls. Well, that is where we are on the 20-year bonds. Maybe we've reached a bottom. Don't have anything tradable yet. Do mark on your daily market worksheet. Bonds are still in a confirmed down move. Our last chart. Let's go to gold. What is gold showing us? And we're going to go to gold actually on the weekly chart. Now, gold is still in a confirmed down move on the weekly chart. We can see that gold started moving down many months ago and has continued with that down move. As we look at gold, have we possibly reached a bottom on gold? Well, if we go to our 2-day chart, and again, we are still traveling, so we have to rely on the internet at the places we are holed up. We see that the 2-day chart actually rotated over around the 28th, and it then started moving up. But the 2-day chart does not mean that gold itself has moved over. Simply means that the 2-day chart has the weekly chart still in a strong confirmed down move. If we look from the 2-day chart to the 2-hour chart, which looked like it started working for us again as we got toward the end of the year, volatility ended, it actually started looking pretty good. If you recall, we had our 4-hour chart work great for us from about February until early December of this past year, just like it did back in 2015. And it looks like our 4-hour chart may be working for us again. We'll continue to watch on that. But remember, all things being equal, the market always tends to move in the direction of the largest chart. That largest chart is the weekly chart. So if you want to look for a potential move, if this 4-hour chart starts working again, when it starts turning down to move in the direction of course, the weekly chart, that might be your safest potential bet. So play with that over the course of the next week, if indeed that's what we see occur. Okay, that is where we are on the charts. Let's talk about the things that move the market over the course of the last week. Well, the U.S. actually added 156,000 new jobs in December, and this unemployment rate edging up from 4.7 to 4.7%. A 2.9% annual rise in the average hourly earnings was the most attention-grabbing aspect of the report. It's the largest yearly gain in wages since 2009. Now, don't forget, though, rising wages, unless they're offset by gains in worker productivity, can end up negatively impacting corporate earnings down the road. So wages may also keep the U.S. Federal Reserve on guard for an additional rate hike, because remember, they want to increase the rate to slow down the growth to sort of keep inflation under control. So we'll see how that plays out. We may see, again, if the economy heats up, we may see quicker and greater increases in the interest rate from the Feds. We'll just have to continue to pay attention to that. The deficit expanded to $45.2 billion in November, and that was a 9-month high from $42.4 billion In October, what do we see happening with global growth? Well, rebound appears to continue. Solid purchasing manager surveys from December were reported, and that suggests that there's an uptick in global growth in the last few months toward the year end. The U.S. also reported its 91st consecutive month of manufacturing growth, and that comes, of course, from the Institute for Supply Management. United Kingdom's manufacturing purchasers index also rose to 56.1%. That is the highest in 2.5 years. We also see that China was forced to defend the yuan amid outflows. What does that mean? Well, on Thursday, overnight offshore deposit rates were increased up to 80% in an attempt to squeeze out speculative short positions in the Chinese currency. That move ended up setting off frantic short covering in a rally, and the rally was largely reversed Friday. So again, Chinese are having to do all sorts of stuff in order to try to stabilize their currency in advance of what? Incoming U.S. President-elect Donald Trump. So we'll see how all that plays off. What happened with U.S. auto sales? Well, global auto manufacturing sold a record-setting 17.55 million new cars and trucks, that is light trucks, in the U.S. in 2016. That is amazing. 60% of the sales were classified as light trucks, since SUVs fall into that category, and that is interesting news as the U.S. auto sales set a record. We also see Australia has a trade surplus. And what's interesting, after all the things that happened, the market booming and such, the retail sales for U.S. retailers actually took a big hit. Many U.S. retailers are now struggling after the holiday season. They continue to see sales migrate to the internet. Of course, the biggest hit, Sears and Macy's. Found this interesting as just a side note that Craftsman tool brand, you just saw Sears sell that to Stanley Black & Decker for right at $1 billion. So that's the news that moved the market over the last week. Let's talk about what might move the market over the coming week. Well, Monday, the 9th of January, we're going to see the Eurozone release unemployment figures. We're also going to see on Thursday the minutes of the December meeting of the European Central Bank Governing Council. They're going to be released. And then China's going to release its December trade figures on Friday. At the same time, same day, the U.S. is going to be releasing retail sales figures for December. So again, any of those things are particularly good or particularly bad. They can affect the market, but nothing like a Fed meeting, anything as big as that happening. But pay attention, because the news of these releases, if any of the news is particularly good or particularly bad, it can heat things up or cool things down in the market. Again, pay attention to those charts, as we told you, particularly the S&P 500 and the Qs, because you may have some trading possibilities on the upside over the course of this next week. We so appreciate you being with us. You have questions, problems, concerns. We are always glad to hear from you. If you're not already subscribed to our daily newsletter, which provides you our weekly summation of the market, our review and forecast once a week. Also, our daily reviews of the market, Tuesday, Wednesday, Thursday, and Friday. Our Monday now encapsulates everything that's going on that day. That's what you're listening to right now. We'll send you those every single day the market is open. Appreciate you bearing with us while we were traveling over the course of this last week. We just could not get an internet connection in the jungles of Costa Rica, but we're not going to be doing that for quite a while to come. Thank you so much. Let us hear from you. God bless you. Have questions, problems, concerns. We are here for you. Practice with us every day. 10 minutes a day is all we ask. All the best. God bless from chartingwealth.com.